Hey everybody, welcome, and hi to Stephen. Welcome folks. What a crazy 3 weeks of employment reports. Quartz reports, Dan Kopf, the senior data reporter, says that the U.S. employment rate is about to become useless. And why is that, my friends? It's because jobless claims today, April 16th, topped 5.2 million. An entire decade of job growth has been erased in a 3-week period of time. So where does that leave us? What does that leave us with? So today I want to talk to you about some things that I'm looking at, and some ways that you might be able to survive and even thrive in the midst of all of this. Stephen always wants to know what I'm interested in and what's going on. So first of all, I got SimCity back up and running here in the background. It's not taking all of my attention, but Isaac, you and I like to build, if you're a fan of SimCity, we like to build cities with dirt roads and then eventually put like a power plant, like a nuclear power plant, right across the street from a residential zone. I don't know why we like to do that, but if you like playing that game, leave a comment below. The other thing that I think all of us have been thinking about is like, how am I gonna stay healthy in the midst of all of this? So I got these core sliders workout things. Actually, Marquet, who did the Profit Accelerator together with me, we'll link to that below. She told me about these 20 best exercises with core sliders. There's all kinds of exercises to do, and we could put a link to these below. They're made by Kamileo. Kamileo. Okay, those are a couple, somewhat interesting things that have been on my mind lately. And let's talk about what things do well in the midst of a recession. So I have been talking about this a lot lately. This crisis, this economic crisis, is a demand crisis. That is the kind of financial crisis that happens when people stop buying stuff, okay? That's what's happening right now. This is not a liquidity problem where the banks have gone under. In fact, the banks have more money and more cash, and companies are even sitting on more cash than ever before. It's sort of weird that companies that have been sitting on top of piles of cash and buying back their stock and buying back their shares are now saying how much trouble they're in, when ordinary folks, like so many of you watching, hardworking, good people have lost their jobs, and those companies don't seem to be hiring those people back with all of this stimulus money that is apparently floating around. That's causing a giant decrease in people's demand for stuff. So the demand for toilet paper, of course, and pasta and stuff that you can store and food you can store, the demand for those things is way up. And Kroger's going to do really well, and Walmart's going to do really well in the midst of all of this stuff. But so many other stocks that are based on demand, like retail stocks, any store that you see in the mall, like Children's Place or Abercrombie and Fitch, or clothing retailers, these are going to get hit really hard because the demand for these things is going to go down. If you don't have the money, you're not going to spend it. Anyway, the crisis has just begun, and that's not good news, but I want to give you some good news. I don't want this to be all negative. It got negative all of a sudden. So here's some things that ought to happen. From here, with the amount of liquidity being thrown into the system and the amount of cash being just tossed around in the system, it's probably inevitable at this point that we're probably going to see gold at $2,500 an ounce within the next 24 months. It's probably inevitable. We are just now beginning to see the earliest stages of what I would call economic nationalism. I didn't make this word up, but I wish I had. Economic nationalism is a nation's preference to manufacture its products and goods and services within its own borders. And you're going to see a massive resurgence. It doesn't matter who gets elected in the United States. You're going to see it hasn't even hit yet. You're going to see a lot of countries and a lot of economic regions like Europe even, you're going to see them say, we want to bring our manufacturing back home. It's inevitable, and there's not a lot of talk about this right now, but we're probably just even a week away from hearing about this. You are going to see a significant decrease in the demand to manufacture products and products overseas, and especially in Asia and in particular China. Yeah, that's all I'm going to say, because I could spend 10 minutes getting angry at China right now. Which isn't going to help anybody. It's not going to help anybody right now. You mad at China, Isaac?
No.
Isaac's not. Isaac's my son. He's here today. You want to come and say hi to everybody?
No thanks.
He doesn't want to come say hi to you. So I think that you see the ETF, the FXI. I think that inevitably my price target for that is 32 at the best over the course of the next 12 to 18 months, because I think this economic nationalism is going to create an environment in which we see more manufacturing come to North America, to Canada and Mexico and the United States itself. And then there's all these other like emerging market economies like Turkey, there's Greece, there's all these places that, can these places ever even recover at all from this situation? And the answer is, I don't know. And you've got to be careful about when you dip your toes back in the water of, jumping back into the market. You've got to be super careful. There's never been a more important time to obey your rules of risk management, but then leave yourself, open to trade all kinds of other things and strategies. Everyone seems to ask me about Apple. I said this in an earlier video. I'm not an expert in Apple for any reason other than I just buy every single product that they release. And it's hard to imagine a world in which Apple does really giantly well during all of this. I hate to say it because I love the products, I love the company, but it's really hard for me to imagine. This is a bearish trend to me. We haven't broken the highs that we made in March. Even when it recovered in March a bit, we haven't broken those highs. And even if we're in the midst of some kind of like 5-wave recovery, 1 up, 2 down, 3 up, 4 down is next. And so 267 or so is my target for Apple. What are the winners? We talked about this recently. Walmart's the winner. Amazon's the winner, right? Amazon's probably going to have the biggest revenue that it's ever had. I mean, these are the 2 big giant winners in all of this. And then my favorite, Justin. Everybody gets so mad at me about this company. I don't think, so I'll just get on my high horse for a minute. As many of you know, I'm not a fan of debt personally, or like economically speaking. I'm not a fan of debt. And Chewy, let's just take a look at Chewy. Here, Yahoo Finance just pops up right there. Let's go take a look at the fundamentals. Here's how to, you ever wonder how I break a company down fundamentally? Here's Chewy, trading for $44.91 a share. Its market cap is, let's see, it's got to be like, $18 billion. It's a pet store. Is Petco public? I just have to see. Is Petco? PetSmart? Is PetSmart public? Okay, it's private. They're not. I don't even think that those companies in 1,000 million years don't have a market cap of $18 billion. Let me just show you how I break a company down. If I want to see if a company is actually worth anything, the first thing I'm going to look at is, does the company have earnings? And the answer to this, after paying their taxes and stuff, Chewy doesn't have earnings. They're burning through $230 million of cash. Their total cash on hand is $212 million. Their total debt is $215 million. They have a current ratio of 0.57. That means they have 57 pennies for every $1 of short-term debt that they have and that they owe. I think it's inevitable that a company like this that's going to struggle, that has a pretty great customer base, and I'm sure that I bought a food bowl for my new dog on Chewy just to see how it worked. It worked great. They're a great company, and they're fantastic. It only took me, a week to get the food bowl in an environment where shipping is really difficult. I think it's inevitable that a company like this drops from here because it has too much debt, and then probably gets bought, right? It's probably an acquisition target. It's a strong online retailer. In terms of customer base, that doesn't have a really great cash position, and Amazon's worth $1.2 trillion, so they could just shovel some stock over in the direction of Chewy and possibly buy it up. All right, that's all I have for you. I know a lot of you are asking about Tesla. Tesla's done. It's had a really beautiful recovery lately. It's hard to imagine I love Tesla. I love Tesla. It's hard to imagine Tesla outperforming in an environment where people don't have a ton of extra money for anything, let alone an overpriced electric car, which I love, right? So it's hard to imagine, how does this company stay up from here? It probably doesn't. It probably doesn't in the midst of all of this, which makes me super sad, but it's the truth. Stay in touch. Leave me a comment below the video, everybody. Let me know how you're doing, and let me know what you want to hear more about. And don't forget to subscribe if you like the content, and leave a like if you like the content. Always enjoy hearing from you, and I'll talk to you soon.